Last week, I led off the Bitcoin Bulletin Podcast by stating that the bears have been calling this bull run over, even since before the halving. Something that listeners know I completely and utterly disagree with. But as if to punctuate my beliefs, as we head into today's episode, Bitcoin is once again staring at new all-time high territory, and what Matt Odell has termed open water Bitcoin.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, buenos dias, morgen, and welcome to episode 224 of the Bitcoin Bulletin Podcast. We are just 16 days shy of the 4th anniversary of our inaugural Bitcoin Bulletin Podcast episode, and just 2 DCA Wednesdays away from 4 years of weekly dollar cost averaging. In those 4 years, there has been a lot of FOMO, a lot of FUD, and a lot of speculation. And of course, nothing really has changed. As they say, the more things change, the more things stay the same, and vice versa. And currently, there is a lot of scuttlebutt on crypto Twitter about the mystery 80,000 Bitcoin worth around $8 billion that was recently moved from some old 2011 era wallets. There's even speculation about a coded numeric message having to do with the early 2000 era TV show Lost. Guy Swan did a Bitcoin Audible episode about this, and I would say if you want to hear a deep dive, go check out his take. But even his analysis is mostly meaningless until if and when anything else further happens with those Bitcoin. So I'm not going to get into any of this in this episode other than what I am saying right now, because other than the fact that it puts into question the assumption that a couple million Bitcoin that hasn't moved in a decade or so must therefore be lost forever, as of yet, this really doesn't mean anything impactful. And any speculation about what it could possibly mean is purely speculation, mostly FUD, and based on what it could mean or what might happen. Okay. So besides the 80,000 Bitcoin, the $8 billion in lost Bitcoin, and besides the price, we do have some actual Bitcoin news to talk about today. But before we get into that, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 904,819, and Bitcoin is ringing in at near all-time high levels, currently valued at 11,200 US dollars per Bitcoin. And that might not be an official all-time high, but it is certainly the highest we have ever seen it on a Bitcoin Bulletin podcast by almost 2,000 US dollars. And it also means we're going to get the fewest number of Satoshis per dollar than we've gotten on any of the previous almost 4 years worth of DCA Wednesdays. Currently, every dollar that you convert into Bitcoin at this price will get you 899 Satoshis. We are drifting ever further under that 1,000 sat per dollar mark that we crossed over at 100,000 Bitcoin, and a long ways away from when we used to receive 5,000 or 6,000 sats per dollar just a couple years ago. Not even at the very beginning of the Bitcoin Bulletin podcast, but when Bitcoin was around the $20,000 mark, every single dollar that you would have converted into Bitcoin got you 5,000 Satoshis. Bitcoin's current value, current US dollar value, current fiat value, that is, gives it a market capitalization of 2.21 trillion US dollars, also an all-time high as far as Bitcoin Bulletin Podcast DCA Wednesday episodes is concerned. Obviously, the market cap is a little bit below the all-time high, but not much, if anything at all, really. And maybe we'll set a new all-time high while I'm yapping. That would be interesting. For those of you who value your wealth in shiny yellow rocks, we keep saying you get Bitcoin at the price you deserve. And currently, for you gold bugs, that price is 33.6 ounces of gold to purchase just one Bitcoin. That is more than 2 pounds of gold to purchase just one Bitcoin. And for those of you who don't do freedom fractions, that's almost a kilo. That's 0.95 kilograms of gold to purchase just one Bitcoin, as gold, like everything else, ultimately trends to zero in Bitcoin terms. For those of you who value your wealth in something a little more edible, one Bitcoin will currently purchase you a staggering 6,219 large pepperoni pizzas from Papa John's. To break that down, that means that if you ordered one pizza a day every day, it would take you more than 17 years to spend an entire Bitcoin on pizza. And that is if Bitcoin doesn't continue to go up in price, which obviously in the next 17 years, it's a no-brainer that it will have gone up substantially from where it is now. But just freezing Bitcoin, let's say you were silly enough to cash your Bitcoin out into US dollars and have exactly $111,000. It would take you 17 years to spend that all on pizza. Well, actually, you're kind of going the other direction, because if you cashed out and took that Bitcoin in fiat over those 17 years, you're going to see significant devaluation, significant inflation. So God only knows what a pizza is going to cost 17 years from now in fiat terms. All I can tell you is that it's going to cost you a heck of a lot less Bitcoin. That metric that has been my favorite metric for the entire history of this podcast, Bitcoin's 24-hour average transaction rate, is absolutely humming. I've seen a lot of speculation on Bitcoin Twitter, and I don't want to name names because I honestly don't remember, but there was someone specific that I follow that was saying that it was mocking people that were calling for $200,000 Bitcoin and for new all-time highs, because he was saying that there was almost no on-chain activity and the exchange volumes were relatively low, and so there was no way Bitcoin is going to surge in price. But if you zoom out just to the 24-hour basis, there's almost a full transaction per second more, almost 25% more transaction volume than there was last DCA Wednesday. And you have to go back 6 weeks. 6 weeks to find a day when there was more on-chain transactions on average per second than there are right now. So Bitcoin absolutely zooming, and not even taking into account the fact that every Bitcoin transaction I've made recently has been a Lightning transaction, and those don't reflect in this metric, because unless you're opening or closing a Bitcoin channel, you're not doing an on-chain transaction when you're using Lightning. One of the really cool things about Lightning. So speaking of on-chain activity, the mempool is correspondingly a little fuller than it was last DCA Wednesday. Clark Moody is currently showing 2,478 transactions pending in his mempool. Mempool.space showing a little more, 2,713 transactions pending in their mempool. And that's up about 500 to 600, depending on which mempool you're looking at, transactions over last DCA Wednesday. So a significant percentage of more in the mempool. That being said, though, the mempools are still relatively empty. There's currently just under 1 block's worth of transactions pending in the mempool.space's mempool. And if you go back, the last 2 blocks were full, but the block before that was only about 2/3 full. There was a full block after that, but the block right before that one, so 1, 2, 3, 4, 5 blocks ago, was almost completely empty. So a lot of space left out there in the mempool still, even though transaction volumes are up. Accordingly, if you do need to send an on-chain transaction, it looks like the fees are about the same as they were last DCA Wednesday. Clark Moody's fee estimator is saying that a high priority transaction should include a fee of 2 sats per VByte, but that a transaction that you don't mind waiting a couple hours to maybe a day for it to confirm, that a fee of just 1 sat per VByte will confirm. Again, that checks out with what I'm seeing on mempool.space, because all of the last blocks, at least the last 5-6 blocks, all included fees of 1 sat per VByte. In fact, 4 blocks ago, there was a fee of just a half a sat per VByte included in the block. So still relatively cheap to do an on-chain transaction. Still extraordinarily cheap to send an on-chain transaction. Mempool.space is saying that any transaction, whether it's a high priority, low priority, medium priority, or no priority transaction, only needs a 1 sat per VByte fee. And plebs, in US dollar terms, that means that you have the most powerful financial technology at your fingertips, and to send a functionally unlimited amount of money anywhere in the world with no middleman, no third party, no government that can censor or prevent that transaction, it will cost you just 16 cents. Imagine someone that just moved that $8 billion of the Bitcoin last week, if that had been gold, it would have taken battleships. It would have taken armies to safely move $8 billion of the gold, but he could have done that for just 16 cents, since it was a Bitcoin transaction. And that in and of itself, as much as anything else, illustrates the tremendous power, the tremendous revolutionary nature of Bitcoin, and how Bitcoin, like every other technology that's come before it, not just supersedes, but completely decimates the old analog technology that it's replacing. Speaking of on-chain, we're now just 365 blocks away from the next Bitcoin mining difficulty adjustment. As you know, Bitcoin adjusts the difficulty that it takes to find a block, to mine a block, every 2016 blocks, which works out to about once every 2 weeks, with the goal of having the average Bitcoin transaction come in at once every 10 minutes. Of course, those transactions come in random, so that's why we wait 2016 blocks, because, well, for example, just looking back at mempool.space, the very last block came in 2 minutes ago. Before that, the last block came in 4 minutes after that, at just 6 minutes ago. And then we had a gap of 18 minutes before the block prior to that. So again, that's just random chance. But if you take all 2016 blocks and average them out, the number we're looking for is an average of once every 10 seconds. Once every 10 minutes. Once every 10 seconds would just be insane. Talk about trying to run a node on a Raspberry Pi with that kind of data coming through. So once again, in about 2.5 days, which looks like it's going to be July 12th now, that's moved up. Last DCA Wednesday, it was looking like it was going to be on July 13th. There is going to be a forecast increase in the difficulty that it takes to mine Bitcoin, and a potentially big one, depending on where you get your data, anywhere from 5.5 to 7.1%. And of course, that is because all those miners in Texas that shut off when they had the heat wave are back on. And as a result, we've made up the exahash. We're almost completely back to where we were, 3 weeks ago? 3 weeks ago on DCA Wednesday, when we were at 879.3 exahash. So right now it's estimated we're at 878.4 exahash securing the network. That is a 90-day average, so it lags a little bit. But I like the 90-day average because since blocks can come in anytime, really, 2 blocks can come in back to back, or it could take an hour for a block to come in or more, because again, it's random. Because of that, if you were trying to determine the amount of hash power securing the network, which is just an estimate on block times, if you saw 2 blocks come in back to back, you would assume that there's a lot more hash power securing the network than there is. So by stepping back and looking at an average, in this case, the 90-day average, we get a much, much better picture. And that picture shows us that drop off where we saw the estimate go all the way down to 875 exahashes securing the network has almost fully recovered. And I would anticipate that the next DCA Wednesday, we see a even more significant increase in exahash securing the network. Nonetheless, the reason we're looking at such a potentially large difficulty increase is because blocks are currently averaging 9 minutes and 20 seconds, obviously significantly faster than 10 minutes, and even faster than the 9 minutes and 32 seconds last DCA Wednesday, when it was already looking like we were going to get about a 5% difficulty adjustment, because we had that big decrease, that 7.5% difficulty decrease, while all those miners were offline and selling their electricity back to the grid in Texas. Now that they're back on, we're gonna basically make up that 7.5% difficulty adjustment, and then continue on up and to the right, because just like the price of Bitcoin, if you zoom out, is up and to the right on average, the amount of computing power securing Bitcoin has been up and to the right as well. And there's no reason to assume that will change anytime soon, even with a mind-boggling, staggering amount of power securing the network. Real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to contribute value back to this podcast by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction where you can say hello. Let us know what you think about the podcast. Let us know whatever you want to say, really. But because it is a Lightning transaction, you are sending value back in the form of Satoshis. And both of those are you do you things. You determine how much value you feel you're receiving by listening to this podcast, and then contribute some of that back. Of course, when you do send a boost, we read it on the following episode of the Bitcoin Bulletin Podcast. And speaking of you, the listener, our geographic distribution of listeners is truly international, and we read out the top 10 countries where our listeners are located, but we do have listeners all over the world. I can scroll through the statistics and it just keeps going, even if it might be 1% or a half a percent of our listeners. Literally every country I can think of, we have someone out there listening to the sound of my voice, and that is truly, truly flattering because I love talking about Bitcoin. I love talking in general, but I particularly love talking about Bitcoin. I have a few things in my life that I'm very passionate about. And I would have to say that right now, at this point in time in my life, for the last dozen years at least, Bitcoin has been the number one thing other than maybe my family. So, speaking of the top 10 countries, the number one country by listenership remains the United States, where more than half of you are listening. So, hello and thank you to my fellow Americans, regardless of which state you might find yourself in. Number two remains Singapore, who surged into the top 10 like a bat out of nowhere, really, reaching all the way up to where they remain at the number two position, which is really cool. So, apa kabar, hello and thank you to all of you listening in Singapore in numbers large enough to keep you in the number two spot as far as our listener volume is concerned. Number three remains Germany, where it has been for almost the entirety of this podcast, at least as far back as I can remember. It seems like Germany has been the number two or number three slot I can't remember a time when they weren't. I'm sure it was, but without scrolling through my notes, I couldn't tell you. So, Dankeschön, mein Freunds in Deutschland. Number three remains Argentina. So, hola, muchas gracias, amigos in Argentina. It's really flattering that Argentina remains in the number four spot because there was a time when Argentina was really high in the top 10, and then it kind of dropped off, maybe right around the time Javier Milei got elected. But Argentina is definitely one of those places where I think the average pleb should have more of an immediate understanding of why they need Bitcoin. Maybe things have gotten so good there under Milei, or they're getting so much better now that's going to change. But anyone listening to the sound of my voice is old enough that they can remember a time when Argentina experienced rapid currency devaluation, probably more than once in your lifetime. And people like OGs like Andreas Antonopoulos, even 10 years ago when he was doing Bitcoin talks and almost nobody was listening, he was giving them to almost empty rooms. There's that one famous video where someone even gets up and walks out halfway through his talk, if you could remember, if you can imagine that. But he used to say that when he travels the world, he always has to explain to people why they need Bitcoin. And when he would travel to Argentina, he would only have to explain how to use Bitcoin. They already grokked the why. So it's really flattering that Argentina came back into the top 10 and that they remain at the number four place. Number five remains Luxembourg. So Dankeschön, mein Freunds in Luxembourg, or Morje to those of you speaking Luxembourgish. Number six remains Canada. So hello and thank you to those of you living up north of the United States. Number seven remains the United Kingdom. So hello and thank you to our cousins across the pond. Number eight remains Spain. So hola, muchas gracias, amigos en España. Number nine remains Australia. So hello and thank you to those of you down under. And number 10, rounding out the top 10, remains Mexico. So hola, muchas gracias, amigos en Mexico. And once again, we have listeners all over the world, not just in those top 10 countries. But I could spend an entire Bitcoin Bulletin podcast just reading off that list and discussing country by country. And so we just read the top 10 for simplicity's sake. But thank you to each and every one of you, regardless of where you find yourself. There are a few countries lurking just below the top 10. One that I'm looking at in particular, it might only take one or two more listeners to bump in the top 10. Colombia, for example, has been in the top 10 in the past. I think they're less than a percentage point below Mexico. So if you are listening in Colombia or one of the other countries that I didn't mention, if you turn a friend or family member onto this podcast, you'd be doing them a favor, and maybe it will bump your country into the top 10, which would also be really cool. All right, on to the news. Well, once again, as they say, the news is the price and the price is the news, and that is certainly the case when we're staring at potential new all-time highs. And depending on where you look, we either reached a new all-time high or we went so close. Clark Moody's dashboard shows that the all-time high was still just $111,980 back on May 22nd. So they're saying it's been 48 days since an all-time high, but I know I saw $12,000 on Coinbase because I had just opened the Coinbase app because it's one of the ways I track the price, even though I try and stay away from the evil empire. I haven't purchased on Coinbase in any time in the memorable recent past. But I open the Coinbase app because it's a reliable source. Usually, it's a reliable source for two things. It's usually a reliable source for current price because they are one of the biggest exchanges in the world, so their price tends to be fairly up to date. And it's also usually a good indication that we're having a bull run because the meme is that we're not in a bull run until Coinbase crashes. So it's always fun to see if they'll even load when the price is increasing. But when I did open Coinbase this afternoon, I saw the price over 12,000 US dollars. And looking at it right now, it's showing the high a couple hours ago was $12,055.11. And that would obviously be a new all-time high. And I have an alert on my phone from Fold. I use the Fold card from time to time, not a sponsor of the show, but if you are interested in using Fold, it's one of the things that we have a referral code for in our show notes. So by all means, if you are considering using Fold, make sure you sign up with a referral code, either ours or somebody else's, because if you don't, you're giving up free sats that you would otherwise get if you use a referral code for signing up. But Fold sent me an alert less than an hour ago that said, quote, Bitcoin pumped above $112,000 for a new all-time high. Keep stacking. So it remains to be seen, depending on where you get your data, if we are at new all-time high territory or not. But at least according to two of the sources I use, I saw Bitcoin go over 112,000, which means all-time high. Regardless, while many have been lamenting Bitcoin's prices boring recently, it is important to note that Bitcoin has now been worth more than 100,000 US dollars since the end of May. And with the exception of a very brief excursion in late June where it dropped to like 98,000 for just a matter of hours, we've remained above $100,000 for more than 2 months, which we already spoke a couple of weeks ago, where that was more than 1% of Bitcoin's entire history, which that's saying something. I mean, it certainly is not indicative of a euphoria phase of a bull run. Certainly not indicative of an all-time high, blow off top all-time high. If you look at the 2017 all-time high of around 20,000 US dollars, that lasted hours, and we were already back down into the teens, heading towards $10,000 lickety split. And if you look at the 2021 all-time high of $69,000, again, that only lasted hours, and Bitcoin retraced fairly heavily shortly after that. So to be above $100,000 for 2 months, more than 2 months now, is really incredible. It's certainly a sign that we're nowhere near the euphoria phase, that this bull run has yet to even get rolling. When you will know it when you're in the euphoria phase, because it'll be just unbelievable. I mean, you'll be looking at the Bitcoin price going, oh my God. And every 5 seconds, you'll be celebrating a new all-time high. I mean, 2017, Bitcoin started out at 1,000 US dollars at the beginning of the year. But during the fall, like September or the end of September, October, November, December, at least every day, Bitcoin is up $1,000. It doubled in price from 1,000 to 2,000. Then before you knew it, it was 4,000, and then 5, 6, 7, all the way up to 20. It was just insane. And while history doesn't repeat, it certainly rhymes. And I've given my reasons in many, many previous episodes why I think that we're going to see something closer to 2017 than 2021. But again, I also say nobody has a crystal ball. This is just a gut feeling I have, but it's a gut feeling based on having been there, done that, having lived through a few cycles, having been a long-term hodler. Maybe not an OG, but at least a hodler that's hodled through a couple full cycles now. I've seen a couple euphoric phases. I've seen a couple bear markets. This just does not feel like the end, like this bull run's over, which, again, buckle up. I don't think we're going to, I wouldn't expect the euphoria phase to even get rolling until the end of this month at the earliest, more like August or September, before things just get completely nuts. But again, each cycle is a little different, so we're just going to have to wait and see. The only thing that's 2020 is hindsight, obviously. Zooming out just a little bit, CoinDesk senior analyst James Van Staten tweeted just a couple of days ago, Bitcoin highest weekly close ever. So even though people on Bitcoin were saying Bitcoin's so boring, it's been stuck at 100,000. It's really funny because 100,000, 100 to 110 is a big range. I mean, that's 10,000. If you talk 98 to 110 or 111, that's $13,000 in range, which was more than the entire bull run in many cases. So in 2017, obviously we went $20,000, but it did the euphoric phase. It blasted off, from $5,000 or $6,000 to $19,000 And we've seen that kind of travel just within the last couple of weeks. So like everything else, you have to zoom out to get an actual perspective. If you're completely myopic and you're staring at the Bitcoin charts constantly, yeah, maybe it looks a little boring. But even then, that's only because that Bitcoin has a way of changing people's perspectives. Because man, thinking back to 2017 when Bitcoin hit $20,000, that was unbelievable. And then people were talking about one day Bitcoin's going to hit $100,000, and everybody thought they were crazy. People were adamant Bitcoin was never going to hit $100,000. And then in 2021, maybe people thought Bitcoin was going to hit $125,000 or $150,000 because of the whole stock to flow thing. But it topped out at 69,000, and 100,000 Bitcoin seemed like a lifetime away. And then we had the bear market dipping all the way down into the teens, and 100,000 seemed even further away. But yet here we are, and we've been here for more than 2 months. So if you zoom out far enough, Bitcoin is always doing phenomenal. Of course, Adam Meister has his 210,000 block theory, which says basically that at any point in history, Bitcoin is always worth more today than it was 4 years ago. And 4 years into the future, Bitcoin will be worth more now than it was 4 years today. And for the entire history of Bitcoin so far, that's always been true. Remember, I have said on numerous occasions, dating back to even before the halving, that I believe Bitcoin will not start its parabolic or euphoria phase until later this summer or perhaps early fall. I've also said again that looking back on previous cycles, this cycle has felt more like 2017 than any of the previous bull runs. And again, that's just a feeling, but it's an educated feeling. And that in 2017, Bitcoin spent most of June and July in the $2,000 range, with the parabolic phase of the bull run not kicking off until August or even October, if you include the fact that September was a pullback month. September was one of those 5 to 7, 30% retracements. So we actually went down in September of 2017, even though if you zoom out far enough, Bitcoin was definitely, going from $1,000 to $20,000 was definitely in a parabolic arc. So I guess you have to ask yourself, do you feel lucky? Many, if not most people, continue to believe that they're too late, that they've already missed out, that Bitcoin has already had all the big gains it will ever have. And I would like to point out that in terms of return, or as a percentage, Bitcoin is as close to $1 million right now as it was to 100,000 when the price was only 10,000 US dollars. And right now at 100,000, people look back and say, wow, if I'd only had the opportunity to purchase Bitcoin at 10K. That's pretty incredible to think about it. To put it another way, when, not if, but when Bitcoin breaks 1 million, buying at 100,000 US dollars will be looked upon the same way that having bought Bitcoin at 10,000 US dollars is viewed right now. You will be considered lucky. People will say you got in early. So if you're feeling like you're too late, if you're feeling like you've missed out on the gains, as Clint Eastwood said, you have to ask yourself, do you feel lucky, punk? Because I maintain you ain't seen nothing yet. Not financial advice. All right. There has been increased speculation this week that Federal Reserve Chairman Jerome Powell will resign, allowing President Donald Trump to appoint a replacement that will more likely be amicable to slashing rates, which is something that Trump has repeatedly insisted that the Fed do, saying that the entire world has already slashed rates and calling on the Fed to do so. I guess, again, zooming out, having a higher time preference, I think Powell's term has only got a couple months left in it anyway. So in the grand scheme of things, whether he resigns this week or whether he rides his term out, either way, Donald Trump is going to get to appoint his replacement soon. And it will be expected that if and when that happens, the Fed will begin slashing rates, just like the other central banks have already done so. And the reason why Trump is so adamant that the Fed slash rates is because we've entered into that period of fiscal dominance, which is basically where the interest that we're paying on the debt is so huge. Our deficits are so massive that the number one thing driving it is the interest payment on the debt. And so Trump is trying to get the Federal Reserve to slash interest rates to make the payments on our existing debt, the money the U.S. has already spent, a little more affordable. But that's a little bit like pissing on a forest fire and hoping you're going to put it out. And, right after the last DCA Wednesday, we passed that big, beautiful bill and it was signed into law on the 4th of July. So regardless of what happens with rates, I think that one beautiful bill raises the debt ceiling by up to 5 trillion US dollars. So while it looks to rein in spending, the direction of government spending is still up and to the right. And as Lynn Holden says, nothing stops this train. So the money printer, one way or another, is going to be forced to increase the rate at which they go burr. Not just go burr, but to go burr on steroids, to go burr parabolically. And whether or not this is good for the price of Bitcoin, one thing is certain. Again, talking about Adam Meister. Adam Meister has always said his slogan, we're one day closer to the next Bitcoin all-time high, but we're also indisputably one day closer to the collapse, or at least the extreme devaluation of the United States dollar, and that your only hope, the escape hatch, as Christine Lagarde put it, not in a positive way. She was talking about escaping from their draconian control. Your only escape, your only life boat, your only escape hatch is Bitcoin. And we're one day closer to hyper Bitcoinization. All right. I have often said that this was going to be the cycle that did two things. It was going to be the cycle that vindicates Michael Saylor and MicroStrategy, and it was going to be the cycle that vindicates Nayib Bukele in El Salvador, because this is going to be both of their first full cycle. And obviously with El Salvador, it's already been the case. For example, this afternoon, President Nayib Bukele tweeted a graphic with the current balance of El Salvador's Bitcoin holdings, which currently total 691,599,204. And while that might not seem a lot, especially compared to Michael Saylor and billionaires that hold billions of dollars worth of Bitcoin, when you consider that El Salvador's population is smaller than that of most major American cities, certainly smaller than Los Angeles and New York, holding more than $500 million of the Bitcoin is pretty significant. But what vindicates Nayib Bukele the most is that that is an 86.57% increase. The total amount of money that El Salvador has invested into Bitcoin. I mean, it's a significant amount, but it's only $291,721,896 compared to a current US dollar value of $691,599,204, a total profit of just under $400 million in less than one full Bitcoin cycle. And again, as Bitcoin continues up into the right, we don't even know what Bitcoin's all-time high could be. If Bitcoin doubles, that means they're going to have like $1.3 billion of the Bitcoin. The Bitcoin 10Xs, which is something it certainly could do if we really do repeat what 2017 saw, where it started the year at 100,000 and went all the way to 20,000, that's 20X, which means if we did that, 20Xing from where we were in January at 100,000 US dollars, it'd be 2 million, a little over $2 million. So even if Bitcoin were to only 10X, we'd be talking about $6.9 billion worth of Bitcoin for a country as small as El Salvador. And that is certainly amazing. Certainly something other countries are going to sit up and notice. They're already noticing, and some of them are there's probably many countries out there already trying to copy what Nayib Bukele has done. We just don't know yet. But one thing is for sure, we will have more and more countries continue to do so in the future, especially, I mean, can you imagine if Bitcoin 10Xs or Bitcoin 20Xs, if we're talking $2 million Bitcoin and we're talking $12 billion in Bitcoin that El Salvador is sitting on for only a less than a $300 million investment. That's the sort of thing that would cause massive, massive nation state FOMO. And it's going to happen sooner rather than later, in my humble opinion. Speaking of El Salvador, yesterday it was reported that legislation had been introduced into the United States Senate calling for sanctions and targeting El Salvador's Bitcoin strategy. It's called SB 2058, and it was introduced by the same schmuck that was protesting when Albrego Garcia, the MS-13 gang member and wife beater, was deported to El Salvador and housed in El Salvador's Supermax prison. That'd be Maryland Senator Christopher Van Hollen. So he, of course, isn't representative of the mainstream, even in the Democratic Party, and the Democratic Party is not in the majority. The Democratic Party has been solidly anti-Bitcoin, lining up even more so in recent days, probably because it's the official position of the Democratic Party that anything Donald Trump is for is bad, and therefore they have to be against it. And that includes Bitcoin, unfortunately, at least at this moment in time. but they're not in the majority. So this bill is not going to see the light of day, but it is certainly amusing. And at the time of this recording, as a matter of fact, searching on congress.gov, there's not even any evidence this bill's actually even been entered. The only the S.2058 that is in congress.gov is all the way back in 2021. And that was the Service Member Safety and Security Act. So it's possible this bill doesn't even get filed. And it's about got as much as a snowball's chance in South Florida of ever getting passed. But that being said, President Nayib Bukele had an interesting take on this on Twitter. He reposted where TFTC posted the bill saying, ha 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 ha, the Dems are just salty. Clearly a poke, political poke at Christopher Van Hollen, who is obviously salty because he kept trying to say that Abrego Garcia was being treated, he was being tortured. And then if you don't know, Nayib Bukele posted surveillance video from the prison of the guy making his single bunk and like playing sports and basically living what I quietly find a shockingly luxurious life, considering how horrible that prison is supposed to be, or how horrible that prison should be based on the type of prisoners that they're housing there. All right, along the lines of increasing mainstream adoption, something you'll expect to see more and more of before we get into the euphoria phase, because the euphoria phase of any market is when the average person is just FOMOing in. So in order to get to that phase, the average person, the mainstream, has to be more into Bitcoin than they currently are. But that mainstream adoption is increasing. And I'm looking at a couple different headlines. This headline from Reuters from just a couple hours ago says, Dubai's Emirates signs preliminary deal to add crypto payments. So Emirates is Dubai's flat-out luxury airline. It's one of the most luxurious airlines I've ever seen. The article goes on to say that Emirates has signed a preliminary deal with Crypto.com. That's not a good sign. That will allow its customers to make payments through the crypto trading platform's payment service. The Gulf carrier's parent company said in a statement on Wednesday. The partnership, which is expected to come into effect next year, is aimed at tapping into the younger, tech-savvy customer segment who prefers digital currencies. Adnan Kazim, Emirates Deputy President and Chief Commercial Officer, said in a statement. So that's cool. You know, first we had GameStop, and we had a bunch of things that were starting to accept Bitcoin payment in 2016, and it really looked like things were going to take off. Remember last week we talked about Backed and how you were going to be able to use Bitcoin at Starbucks and get your rewards points in Bitcoin. Of course, that fizzled, a lot of which was because of that Operation Choke Point 2.0, the Biden administration crackdown on crypto service companies and their banking connections. But that's gone now. And so speaking of increasing mainstream adoption, MarketWatch reported this morning, this big name advisor says avoiding crypto is now a more speculative investment than buying it, or more speculative move than buying it. The article goes on to say Rick Edelman says it's irresponsible for advisors to not recommend crypto right now. Owning crypto is no longer a speculative position. Failing to do so is. That's our call of the day from Rick Edelman, veteran wealth manager and founder of the firm that became Edelman Financial Engines. His recently published white paper, The Death of the 60-40 and Why Your Crypto Allocation Should Be 10% to 40%, makes that case. Crypto is what he calls a once-in-a-generation opportunity for investors that most of the financial services industry is not acknowledging, he said. So you might not know who Rick Edelman is. Maybe you do. You might not care, but it's another example of the mainstream financial community sitting up and taking notice. The majority of the wealth in the country and in the world right now is held and traded and managed on and by and on behalf of the boomers. And the boomers do things like they read the money paper and they watch Fox Business and MSNBC, and they read MarketWatch and they listen to financial advisors like Rick Edelman. And you know, the Overton window, I keep using that phrase, the Overton window has shifted radically here, because if you remember just a couple of years ago, the mainstream financial community was absolutely crapping on Bitcoin, with people like Jamie Dimon, the head of, JP Morgan Chase, saying that he would fire any of his employees that were dabbling in Bitcoin, to now having mainstream financial advisors, like in this case, Edelman Financial Engine, saying that you should have a 10 to 40% allocation. I mean, remember when the Nakamoto portfolio was saying that you should have 1% of your investment in Bitcoin. We use that example many times. I use that to orange pill some family members of mine, saying that, on any given day, the stock market can lose 1% of its value. So if you took just 1% of your total portfolio and put it into Bitcoin, it would have to go completely to zero for you to lose what you lost on just an average Tuesday on the NASDAQ or the S&P. Now that's clearly become a 10 to 40%. And of course, for those of you who are in my shoes, you're probably all in, which means you're just front running the mainstream, which is good because you're going to be the new financial elite one day. For the people that are salty about the boomers owning all the stocks, all the bonds, and all the real estate, this is your chance to front run that. I mean, the boomers are going to be dying off. They already are, but their heirs or their trusts or the charities they donate to are going to be inheriting all of that. And if you want to be in line to be a part of the financial elite, Bitcoin is your ticket. But more importantly than that, Bitcoin is about freedom. Bitcoin is about financial inclusion. You shouldn't be into Bitcoin to get rich. Hopefully that would just be a nice side effect. All right. Again, as I've already hinted at, the regulatory landscape in the United States continues to evolve in a Bitcoin-friendly manner. I know I've mentioned this dozens of times, but to really put things into perspective, just harken back to where we were less than a year ago. It was months ago, really, where we had Elizabeth Warren's anti-crypto army. We had the SEC and the FDIC's war on not only Bitcoin companies and not just debanking Bitcoin companies, but even flat out destroying a crypto-friendly bank in one particular instance. Instead, we find ourselves where this Overton window, I know you're probably getting sick of hearing that word, has shifted so far in the direction of Bitcoin that we almost need one of those side view mirror signs that say objects in the mirror closer than they appear. It really is stunning. And of course, Bitcoin doesn't care. Governments can't ban Bitcoin. They can make it a pain in the butt to use, but they can't stop you from using it. But right now, as it stands, we have a very friendly Bitcoin administration in the United States. And that just means that Bitcoin has more legroom to run, that Bitcoiners and Bitcoin developers, you've got a window right now to build your hearts out, not just for the price of Bitcoin to go, but for your Bitcoin projects, your Bitcoin companies, your Bitcoin startups to really take off. And that's one of the other reasons I think that this Bitcoin bull run is going to be really spectacular, because you don't even know what unicorn company is getting ready to launch now in the Bitcoin space. We know what our favorite Bitcoin companies are right now, regardless of which company you're fanboying over, or maybe not. The new golden goose in Bitcoin is probably not even out there yet. Who knows whether we find out about it the next day, the next month, or even this bill run, but there's more to come in this space for sure. This next piece is about crypto, not Bitcoin, but it's relevant because I think they're demonstrating that they get it. And this was something that Hester Pierce posted. She posted on Twitter some thoughts on tokenization of securities. And of course, Hester Pierce is an SEC commissioner. She's known as the crypto mom because she was the first openly Bitcoin-friendly commissioner on the SEC, taking exception to the rest of the SEC when they were trying to deny the ETFs, for example. Journalist Eleanor Tarrant, who was formerly of Fox Business, summarized what the SEC was saying in their X posting by saying, "Timely thoughts from Hester Pierce, given concerns today from some @Banking GOP members that putting assets on chain will enable crypto participants to circumvent regulation." Again, this is about S-coins, about tokenization and stuff like that. But the point being, what Hester Pierce said was that, quote, "As powerful as blockchain technology is, it does not have magical abilities to transform the nature of the underlying asset." So I think the big takeaway is that that Hester Pierce and the SEC, they get it. I think they're leaning Bitcoin, not blockchain. But they're also open to that open sandbox where they're going to allow people to develop, to experiment. And if some of those are shit coins, so be it. That's just the nature of the free market, I guess. All right, on to what makes today and every Wednesday special, and that is that today is DCA Wednesday. What is DCA Wednesday, you might ask? Well, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, we set our equal portion at just 20 US dollars, and we chose weekly for our regular interval. I chose 20 US dollars because I wanted to keep it as simple as possible and as relatable as possible to the largest number of listeners out there. That if you can come up with just at least $20 a week, that you could stack an appreciable amount of Satoshis and an appreciable stack of Bitcoin that will put you easily in the top 10% when we do hit hyper Bitcoinization. And we chose weekly for our regular interval because most people I know that do DCA do so on a weekly basis, and it also worked out really nicely for a weekly podcast. So this is now going to be our 207th weekly DCA stack. We started almost 4 years ago, all the way back on July 28th, 2021. And so far we've stacked 206 Wednesdays, converting a total of 4,120 US dollars at just $20 in a whack into a stack of more than 0.1 Bitcoin, 10,803,857 Satoshis to be exact, currently worth about 12,000 US dollars. To grow that stack once again today, I'm going to use Strike. Strike is just an app I chose because, well, we had been using Cash App for almost all 4 years of this podcast. They raised their fees, so I had to find another service that I used that would allow me to stack inexpensively. So I chose Strike. Again, this is one of those you do you things. Strike and Cash App, neither of which have ever been a sponsor of this podcast. There are referral codes in the show notes to Strike, to Cash App, and a couple other services because, as I said, if you're going to sign up, you might as well use a referral code because you get something that you wouldn't normally get if you don't use that referral code. Scroll to the bottom of the show notes and you'll find those referral codes if you so desire. So I've got Strike open. I actually have more than $20 on Strike because I wanted to make a couple of big purchases with Bitcoin, not just my DCA Wednesday stack. So I have a little bit extra money on there. So it's just a matter of opening Strike, tapping buy, entering $20, tapping next, tapping confirm, and boom, just like that, we purchased another 17,761 sats. That is almost heartbreaking because this is the first time on Bitcoin Bulletin podcast history that we've received less than 18,000 sats for our purchase. That is just the nature of the beast. As the price of Bitcoin goes up, because the dollar value, the purchasing power of the US dollar goes down, we're going to get fewer and fewer sats. But the other way to look at it is that one day when we hit 100 million US dollars, that means we'll be at dollar Satoshi parity, which means for just 20 US dollars, we would have purchased 17,761 dollars worth of Satoshis. So we have more sats than we had yesterday, and that's all that really matters. And we have significantly more sats than eventually we're going to be able to purchase. You know, when Bitcoin hits $1 million, we're going to get less than 10,000 sats. So it is what it is. So those 17,761 Satoshis increase our stack now to 10,821,618 sats, worth about 12,069 US dollars. Not too shabby considering we've converted just 4,140 US dollars into Bitcoin now. We purchased at what is hands down a DCA Wednesday all-time high of $111,536.51. That is just about almost $2,000 more than the previous most expensive we've ever purchased which was back in April, on April 21st, when Bitcoin was just under its previous all-time high of, we purchased at $109,768.27. So that also increased our average purchase price because the more expensive we buy, it's going to drag that up. It raised our average cost basis by $122.23. Our average cost basis is now $38,256.76, which really isn't too shabby considering Bitcoin's worth almost $112,000 a Bitcoin right now. So almost, significantly more than double what we've invested. And that's pretty cool. Perhaps as importantly to those of you who are keeping score in a fiat term, when Bitcoin hits 200,000, which I think it will do for sure. I never say never, don't have a crystal ball, but I don't think there's any reason we don't hit 200,000 this bull run. And if and when we do, our current stack without adding another Satoshi will have a US fiat value of $21,643.22. That is, that's 4x. That's almost 5x what we've invested into Bitcoin right now, which is not too shabby. Of course, there are plenty that are calling for 1 million Bitcoin this cycle. If we mimic 2017, certainly that will happen. I believe it'll happen sooner rather than later. If you'd asked me to pull a guess out of my hat before this bull run even started, before this halving even started, I would have said we'll hit maybe 250 to 300,000 this cycle. And then next cycle after the 28-20 halving is when I would have guessed we hit 1 million, but I don't know. That's just purely a guess. I do know that we'll get there eventually as we head towards hyper-Bitcoinization. And when we cross that 1 million US dollar mark, our current stack will have a staggering $108,216.18 in equivalent fiat value. Of course, Adam Back said that he believes by 2032, Bitcoin will hit 10 million. I don't think that's unreasonable at all. When that happens, our current stack will be worth more than 1 million US dollars. $1,082,168.10 to be specific. So for those of you still wondering if you're too late, if you're not early anymore, I posit to you that for just $4,000, you could have turned that into $1 million. That's still, if you just jump in right now, that's still only about $12,000 of the Bitcoin that will be worth more than $1 million when Bitcoin hits 10 million. And of course, Fidelity's director of global macro, Fidelity Investments, Director of Global Macro, Jurian Timmer, said that they believe that by 2038, Bitcoin will hit 1 billion US dollars. That's $10 per Satoshi, plebs. Mind-boggling. I have a hard time fathoming that. I don't see any reason why it won't happen, though. Just like I had a hard time fathoming $100,000 Bitcoin in 2016. I guess anything's possible. So if and when Bitcoin does reach Fidelity's target, I think there's no reason it won't hit it eventually. Maybe not by their forecast of 2038, but eventually, if Bitcoin hits the 1 billion US dollar mark, our stack, without adding one more Satoshi, would have a US dollar value of 108,216,180 US dollars. Not too shabby, considering we converted just 4,140 US dollars into Bitcoin, and we did it stacking just $20 a week. As usual, before I wrap, I would like to ask you to help feed that algorithm monster by making sure you are subscribed to this podcast, making sure you have automatic downloads enabled if you're listening on Apple Podcasts, to share this podcast with a friend or family member, and to rate or review this podcast on whichever podcast platform you are listening. Those all go a long way towards boosting us in the search results. Just by doing so, you might help a pleb that might not otherwise find this podcast, see this podcast show up in their feed. Maybe somebody who thinks that they have to buy a whole Bitcoin. They don't realize that they can stack as little as $1 worth of Bitcoin, that even if they have just $100 or $20 or $5, that by getting started and stacking consistently, they will eventually build a stack of Satoshis that will put them in the top 10% of global wealth when hyper-Bitcoinization occurs. You can also help feed that algorithm monster by making sure you're following us on X or Twitter, where we are at BTC Bulletin Pod, at BTC Bulletin Pod. We have a lot more listeners than we have Twitter subscribers. So if you're one of them, please take 30 seconds out to just click follow. I won't spam you. I only post updates about this podcast. Occasionally, like today, I post one or two things that I'm getting ready to talk about, so you can follow along while you're listening. Since this is an audio podcast, you can see the articles of the things I'm talking about on Twitter. But also, more importantly, I like to hear from you. And I know not everybody can send Satoshis to help contribute value back to this podcast by streaming or by sending a boost. Thank you to those of you who have. But for those of you who can't or choose not to, my DMs are open. They're open right now. They're on my laptop. Twitter's open. I have my DMs open. I read my DMs and I respond to every DM that isn't spam. So reach out and say hi. I'd love to hear from you. It's very, very rewarding to know, even if you're a NIM, even if you're anonymous, who you are in air quotes, where you are in air quotes, that you're listening and that you say hi. Of course, not everybody uses Twitter. So if you don't use Twitter, you can also send me a good old-fashioned email. I have my email open in another tab, and I do respond to my non-spam emails as well. I do get a lot of emails saying, hey, we can boost your podcast ratings, or hey, you should have this shitcoiner on your podcast. And I usually ignore those. But if you're a pleb and you reach out and say hi to me via email, I do read it and I do reply. And the email for the podcast is bitcoinbulletin@protonmail.com. Once again, that's Bitcoin Bulletin, like the show, at protonmail.com. Of course, don't forget to join us next Wednesday and every Wednesday while we continue our Bitcoin journey, stacking just $20 worth of Satoshis at a time. But until that time, keep on stacking those sats, you sexy sat stackers.